There's a bit of a disconnect right now between the long-term structural demand and policy support and short-term price volatility in lithium and other commodity markets.
Lithium chloride is going to be a very interesting market going forward.
Welcome back to Rockstock Channel. It is Wednesday, March 4th, and Matt and I are recording this just as we're wrapping up a few days in Toronto at PDAC. I'm actually back. PDAC is the largest mining conference in the world and one of the most important annual gatherings for the global mining and critical minerals industry. Over the last few days, we've had a chance to meet with dozens of companies, investors, policymakers, and analysts across the mining ecosystem, and also recorded a series of short interviews with a number of companies which will play after this recap discussion. These include Q2 Metals, PMET, Elevra Lithium, The Metals Company, NOA Lithium, Galan Lithium, Lithium Africa, E3 Lithium, First Phosphate, Surge Battery Metals, and Libra Energy. As a reminder, nothing in the discussion is investment advice. Rockstock Channel and RK Equity have relationships and investments in a number of the companies we'll discuss today, so please do your own research and read the disclaimer at the end of this video. We'd also like to flag a new video earlier this week with Kevin Baum, a strategist at our sponsor, USCF Investments, which outlines their outlook for commodities in 2026. USCF Investments has been making it easier to get exposure to commodities investments for almost 20 years. Their battery metal strategy fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, silver. Matt and I also caught up with Altius Minerals, which is acquiring our sponsor, Lithium Royalty Corp. Altius Minerals is a 2 billion Canadian diversified royalty company with numerous producing and developing royalties in copper, potash, iron ore, as well as renewable electricity royalties and some gold assets, and now a very significant lithium portfolio once they consummate the LIRC acquisition. Some big picture takeaways from PDAC. One of the biggest themes of the year is that critical minerals are no longer just a mining topic. They're increasingly a geopolitical and industrial policy priority. At PDAC, as we had flagged for the past kind of couple of weeks, we expected a couple of announcements out of the government. Canada's Energy and Natural Resource Minister Tim Hodgson made several announcements aimed at accelerating investment into critical minerals projects, including partnerships expected to mobilize billions of dollars into new development across the mining sector. We saw capital commitments or policy support linked to projects involving companies like E3 Lithium, First Phosphate, Nouveau Monde Graphite, Frontier Lithium, and Rio Tinto. So Canada clearly wants to position itself as a key supplier of critical minerals to Western supply chains. That's why I'm wearing the Canada Rocks hat today. Matt, I think, has his Rockstock Channel hat for the occasion, but this is very much a Canada-focused PDAC podcast. So while the policy backdrop was very constructive, and Monday was a relatively positive day, lithium equities sold off sharply Tuesday and remain weak as we're recording this on Wednesday morning. Part of that appears tied to disappointing BYD sales data, which spooked investors around near-term EV demand. But we also saw broader market volatility linked to geopolitical developments involving Iran, which pushed global markets into risk-off mode. So there's a bit of a disconnect right now between the long-term structural demand and policy support and short-term price volatility in lithium and other commodity markets. So with that, Matt, this was my 23rd straight PDAC attendance. And as I was walking around, I was shocked by your telling me that this was your first. So what were your high-level takeaways of your first ever PDAC?
Well, as I said to you on the floor there, walking around with, really a huge amount of mining companies, investors. It's amazing when you grow up in a country without a mining industry and you go to a country with a mining industry, because the sheer size of the industry is boggling. I've been a geologist, a mining analyst for 25 plus years now, and it is, the magnitude of the event was really impressive. I think that there were a few clear trends that come out that we'll touch on later. As you said, we met a lot of companies. I'm still in Toronto. I'll be meeting more companies today as well. But I think the key issues that are in the market at the moment are funding. But also, I picked up from a lot of companies the issues with regards to developing projects, personnel, human resources could become an issue as well. And I think that going forward, it will become important for companies to have experienced management teams, and particularly in lithium. This is a sector where there aren't a lot of experienced management teams. There aren't a lot of management teams who've actually built these projects before. And the sheer number of lithium projects that we have to add over the next sort of 10, 15, 20 years, is going to make human resources, put a lot of pressure on human resources. So, for me, that was something that came out quite strongly from some of the conversations I had. And it was great to see that the Canadian government put their hand in their pocket, but we need to see more. And even though, we're hearing from a headline point of view that there is funding coming into the sector, it's still trickling in quite slowly. And if we go into a period where equity markets are quite volatile now, it will impact ability for some companies to access equity funding. So I think that's it's a key issue for the sector at the moment.
Okay, interesting. As I was on the plane ride home, looking through Twitter, what was making the rounds was WoodMac came out with a report suggesting that lithium demand could top 13 million tons by 2050. That was in their, I guess, aggressive energy transition case. They had, that's very far into the future. So, but nevertheless, goes to your point of how many projects are going to be needed. And the lithium sentiment, obviously, very, very much stronger than it was last year. And overall, the PDAC, again, I've been going there 23 years. It was very crowded, and it was absolutely giddy, for the most part, certainly on Monday. And then everyone was kind of panicked on Tuesday as silver and gold and everything in their portfolio was not so great. But we attended the benchmark event on Monday, where the lithium section, in particular, and we had some interviews. We will have these interviews with Ken Brinsden and Lucas Dow, but they and Q2 and others were talking about a very significant increase in strategic interest. I asked the question, are any of the Googles or the Microsofts or, the Metas, the data center groups who are increasingly wanting to, have their own power, has there been any inbound from them? And the answer was no. And it was also no on the auto companies, but the strategic interest is very, very much battery company focused, and so that was just a strong positive data point. I'll also mention, Mark Carney is the new prime minister. Last year there was an election upcoming. Mark Carney is very much kind of an investment banker type, private equity type, and he was the governor of the central bank in both England and Canada. So just a much more financially savvy person and serious person, I think, than Justin Trudeau. This Tim Hodgson, the energy minister, I think also has some banking background. So I see some parallels just in a mindset and mentality to the Trump administration, which is filled with billionaire entrepreneurs and bankers and how they view the world. And so I've heard this from a few of the companies that were, that there's action, not just talk, coming out of Canada. And they obviously are not as big and wealthy as America is, but these are meaningful, starts. I think there was some talk, there's a Quebec election coming up this year. So in terms of condensing permitting timelines and the like, there was some hope that things could be a bit more speedy, in that sense, from Canada, and we'll see what happens between Canada and the U.S. But there's definitely like a come on guys, Canada and U.S. are friends, and why should I think Ken Brinsden was saying, why does America need to like worry about Greenland and Ukraine and Africa when you have on your doorstep here all sorts of amazing critical minerals and a very stable country. And I think that for the administration of common sense, which is Trump, that logic will play itself out. I will remind our viewers that at the end of last year, the Trump administration made some changes to the Development Finance Corp, which normally provides money only to developing companies, but they basically developing countries, but they can now allocate more than $200 billion of debt and also, I don't know, $5 billion plus of equity to Five Eyes countries, which include Canada as well as Australia. And that is, for certain sectors, including critical minerals. So we haven't seen anything yet. We did see Trump tweet about using the DFC for the Strait of Hormuz alongside the Navy to make sure that shipping is going through there. I don't want to talk about too much geopolitics on that, but anyway, why don't you respond to any of that or share any tidbits that.
Maybe to sort of bring it back a little bit to the equity market, because one of the things that the benchmark analysts did point out in the lithium session was that there's a bit of a differentiation in China at the moment between lithium carbonate and spodumene concentrate, insofar as there's actually a shortage, a deficit opening up in lithium raw material, while there's a little bit of an oversupply of lithium chemicals. And this is something I've been talking about since probably this time last year, actually, insofar as what we've seen with the CATL plant being off and on all the time, that there's actually a deficit opened up, which means that potentially spodcon prices may be more defensive. So the last couple of days, we've actually seen the carbonate price come off, but spodcon prices may be more defensive because there's currently this deficit of lithium raw material in China. And it sort of does bring it back to this issue that we've talked about a lot. We talked about with a number of the companies that we saw, conversion capacity. Obviously, Albemarle's closed down its converter in Western Australia. People wondering, what's going on with Tesla, what's going on with the Calibre converter in Europe, what's going on with the SQM and Westfarmers converter in Western Australia. Apparently, the POSCO converter in Korea is running at low capacity utilization. So, where do we go in terms of, lithium raw material development and everything? And I think it's a really interesting question, because we need the conversion capacity in the West, but so far, those who've developed conversion capacity outside China, haven't been able to make economic sense.
Those are great points. I'll make two related but different points. On the plane ride home, I ran into a very important kind of government official working on all of these issues, and we had a long kind of conversation about like where does the administration stand in their understanding about the battery supply chain, not just like lithium. And a lot of the arguments I've been making on strategic lithium reserve and the U.S., can be using Canadian and U.S. assets, move from net importer to net exporter of lithium. But it goes beyond that. You need the cathode, you need the anode, you need the processing capability. And he was nodding his head. Yeah, we get it. There's a big understanding that batteries are critical for the military, for the are winning the AI race. And this guy, was more on the defense side of things, not so much on, the energy side of things. So there has been a bit of a we heard that, lithium has kind of like been put into the energy bucket, right? Whereas the Department of War has been focused on, military and munitions and, rare earths, et cetera, related to that. But, that's not the case, right? Like at the Department of Defense as well, there's a great understanding that we need processing, not only of lithium chemicals, but the entire battery supply chain. So, but politically, it's been, it remains a challenge, right? So they recognize the problem, but then there's the, how do you articulate it, politically? So that's one angle to it.
Yeah, I mean, it's not just converters; it's the entire midstream. And we were talking to a company at the conference who is producing lithium. They're then exporting the material to China for processing, and then bringing it back from China to Europe and North America for actually uses in batteries. And that's a crazy sort of situation. There were a number of CAM plants on the drawing board in Canada. In the US, those have been cancelled now. So do we, start to see focus shifting back to the CAM plants, and the existence of CAM and cell manufacturing? The other key issue is obviously as we move towards LFP, where does the P come from? The P has been completely forgotten in the LFP supply chain. I mean, we've got lithium, we've got graphite, we've got cobalt, we've got manganese. Potentially, we've got nickel in the West, but we don't have phosphate, and that played in again. We saw first phosphate present, and highlighting again where is that P going to come from in the Atlantic Basin, and really there's very, very few sources that it can come from going forward. So it's great that people are starting to talk about cathode, but we really need to look at the whole supply chain as well.
Very good points. And First Phosphate did receive 17 million, grant from the government. So it is on their radar that there is a good asset in Quebec. And hopefully Canada is not forgetting the P in LFP.
Yeah.
The other thing related to the spodumene conversation you were just having was that Benchmark put up a cost curve, and and Ken Brinsden kind of articulated, I'm not so sure, arguing that like at current prices a lot of supply can kind of come on stream, and Ken was arguing that in the downturn there has been a lot of high grading, and not stripping of the ore, just so that they can make money and survive the downturn. But now that they're making money, they're going to strip more, so the costs are going to start going up in upcoming quarters. So this is a guy who's been there, done that. And I thought that was a very prescient comment on where the actual costs are compared to where the PRAs, price reporting agencies, are estimating them to be.
I think, part of the difficulties for the price reporting agencies and the industry consultants is, they're not comparing apples with apples in terms of the cost reporting by companies. There's all sorts of smoke and mirrors in terms of cost reporting. Some companies report C1 costs, some report C2, some C3, some include royalties, some exclude royalties. Some include freight and insurance, others exclude those. So it is actually very difficult to arrive at a standardized number across the industry. And I think one of the other things that we see a regular mistake when we see companies publishing cost curve is that they will publish the cost for the spodumene concentrate producers alongside the brine producers, but they will not factor in the conversion costs. And that's something that we see with a number of companies' cost curves, which makes us sort of scratch our heads and start foaming at the mouth and getting generally a little bit aerated about these sort of things. Maybe it's just me.
Well, with respect to cost, we had a good catch up with Galan and NOA Lithium Brines, and Galan is actually relatively close to production of lithium chloride, which they're going to sell to their offtake partner. That was just overall interesting. We point out on our scoreboard, we have, emerging projects, and then we have producers. When we think about producers, they're kind of spodumene producers or chemical producers. But then there's kind of like lithium chloride, and last week we talked about, the emergence of a lithium sulfate, market, coming out of Africa. So what do you think about the lithium chloride concept?
I think it's a great concept. I mean, we're actually talking about two concepts within lithium chloride, because there's anhydrous, so lithium chloride sort of solid material, and lithium chloride aqueous. So what Galan is planning to export is aqueous lithium chloride, so lithium chloride solution. A lot of the sort of developers within Argentina at the moment are talking about moving anhydrous. So if you take the water out of it, so you're moving it as crystals, and then it gets rehydrated at the other end. So there are different costs associated with moving the different types of material. You move a dry material, it's a lot cheaper on a per ton basis. But because Galan have such a high quality asset, they're able to justify the economics of moving the aqueous lithium chloride. And I think it is a very interesting product, because it's actually higher grade than spodumene concentrate. It's got a higher lithium concentration in it, but it's sort of in the middle between a spodumene concentrate and a lithium sulfate. And I think increasingly we're going to see a lot of that happening. The other point, of course, is that if you move lithium chloride, you're cutting a lot of your capex out. You don't have to make a carbonate plant. You don't have to build a carbonate plant at altitude, which is expensive. And then you don't have to move the reagents to your lithium carbonate plant at altitude, which is also expensive. So, there's lots of positives of going the lithium chloride route, and increasingly also in China, as we move towards solid state, lithium chloride is a key precursor for manufacture of lithium metal for solid state batteries. So I think lithium chloride is going to be a very, very interesting market going forward.
And what price does lithium chloride? How do we think about that?
Well, it's kind of like looking at a copper concentrate. So you sort of pay you get an amount less a sort of tolling amount. So we talk about it in terms of payability. So you'll get sort of like between 80 and 90% of the value of lithium carbonate will be your
That's
lithium
huge. That's a very big percentage.
Yeah. So and in terms of the amount of savings you make in capex by not building a carbonate plant, and the amount of operating costs you save in terms of not taking stuff like quicklime and other material to high altitude, it can be, the cost trade-off, the cost revenue trade-off could be substantial.
Interesting. I think SQM was selling chloride for many years in the early days. No,
before they went downstream, yes, I believe they were. Yeah. So I think Ganfeng is looking to export chloride from their plant in Argentina, I think increasingly we're starting to see many of the brine developers look at chloride in the first instance.
Okay. A hot ticket in town in New York, which unfortunately I don't have, is Argentina Investment Week next week. And I think the Malay is going to be here. I think it's going to be more focused on politics and the like. But we have been arguing forever. I think, Matt, you came here almost a year ago, and we're talking about how cheap Sigma was and how cheap Galan was, and how Brian's low end of the cost curve, et cetera. But, I remember a few years ago, I don't know, the lithium 2.0, we're now on lithium 4.0, but when Macri came into power and everybody, there was an Australian hard rock, but then there was this huge rush, into Argentina. A lot of those projects have been sold at very high valuations. And the argument was, Argentina brines are on the low end of the cost curve and they're great assets here. And then you had, Fernandez kind of come back. So Argentina was a bit in the wilderness politically for periods of time, but like Milei and the Riggi and, as a partner to America, just the backdrop, the enthusiasm for Argentina should be much higher than it was under Macri and Fernandez, and with lithium prices rising.
In my view, it amazes me that some of these Argentine assets are trading at such low multiples. It really does, because, at the end of the day, you've got companies like Rio Tinto, buying into Argentina, looking at Argentina. You've got, high grade brine assets. You've got Ganfeng. You've got the Chinese, buying up assets all the time. And some of these listed assets in Argentina, not advice guys, but are trading at like crazy low multiples. And I'm scratching my head going, well, why? Because
it doesn't make sense.
If I want a through the cycle asset, it's going to be a low cost brine asset. Why wouldn't I be looking at these Argentine assets? So very, very interesting sort of state of affairs at the moment. I did want to talk briefly about some of the weakness that we've sort of seen in lithium over the last couple of days, which has been interpreted as due to the slowdown in domestic sales in China. To tell you the truth, that's kind of been expected by myself and many analysts. If you look at my blog that I put out on the EV space a couple of weeks ago, you will see that Chinese EV sales growth domestically has actually been slowing already in November and December. So it's not really a surprise to me and many analysts to see quite weak sales in the first couple of months of the year as well. And in fact, I had built in quite a substantial slowdown in Chinese EV sales into my forecast already for this year. So I'm not actually worried about that. The other concern, obviously, is how much impact the current issues in the Middle East are going to put in terms of BESS installations and in terms of BESS orders. That is relevant, and we'll have to wait and see. But Middle East is just one area for BESS, and it is a growing area that's expanding rapidly. But compared to the amount of BESS installations in China, it's practically irrelevant. So as long as China BESS stays robust, US BESS stays robust, Australia BESS stays robust, Latin America is continuing to grow, I'm not overly worried about some of these projects in the Middle East being deferred.
Okay, thank you for that. I know you need to catch a train to get to the PDAC now, so let's wrap it up. Matt, appreciate your taking the time early this morning to do this. You're going to be traveling Thursday, Friday, and I have some things. So we recorded this Rockstock Recap a bit earlier in the week than we thought. Hope you enjoy it, and now I hope you enjoy, 7 or 8 company interviews we did on the floor and outside of the conference on Monday and Tuesday. Take care.
Cheers.
Frank Shesky, CFO of the metals company here at the PDAC booth. What's going on? What say you?
Well, look, it's been a very busy conference for us. I've been doing this now 6 years in a row. Every time that we're here, there's more and more interest. Certainly, we have a very interesting story to tell for this group of investors. Obviously, we're taking a U.S.-centric approach on the permitting side, but really the scale of the resources is beginning to resonate. And I think you'll see from our booth and a lot of the assets around here, a lot of people are impressed with just how much has occurred since going public a little over 5 years ago. And now we're on the precipice of getting a permit less than a year from now in our expectation, and then getting into production less than 2 years' time. So it's very exciting, and it's been great to see the interest grow since we've been doing this year after year as a public company.
How's, apart from the company interest, what's the vibe here at PDAC compared to prior years?
Yeah, look, there are two main topics of conversation. There's gold and there's copper. Obviously people are focused on precious metals, given, a lot of the geopolitical instability that we've been seeing. But I think it also points to the necessity of supply chain security, not just for copper, but for nickel and manganese and cobalt. So we are telling our story to the U.S. investor base as well as the Toronto base here at a very good time. I think people are realizing the idea of sort of free flow of global commodities is not going to be something to be relied upon. And as you're talking about bifurcation of supply chains, you're going to need captive or allied supply of a lot of these metals, and that's why what we're developing could take the U.S. from total dependence in nickel, manganese, and cobalt to self-sufficiency in all three of those, and then a whole lot of copper as well. So it's I think a very ripe conversation, but the vibe is generally solid. I would say if you ask people on Sunday and Monday, it would be different. Today and Tuesday in the market, it's a little bit more red, but overall the theme here is very critical.
Yeah, well, when the year started, we didn't expect war in Venezuela or Iran. It wasn't on most people's dance card, but when I was here last year, Trump started his trade tariff war and was beating up on Canada about fentanyl. So it always seems like something happens here, but this is, I think, I've been in business 23 years, and I think I've come here every single year. And the vibe, it feels to me like 2003 for early stages of super cycle. But, in the past, certain commodities were bullish. Battery materials were bullish a couple of years ago. But now it's bullish kind of everything. You mentioned copper, gold, but just esoteric critical minerals. Since I think we last interviewed you, Rubio had his ministerial. Robert Friedman was shaking hands with Trump in the Oval Office. As your background's on Wall Street on the buy side, what's just, I guess, the Washington vibe and thematically, and also as a U.S. listed stock, and you've attracted a lot of interest, just on the basis of that. Yeah. If you can comment overall, your thoughts.
Yeah, absolutely. Well, there is a lot of political will to get a lot of these projects off the ground, but you can't change the geology. And we happen to be sitting on a very, very large resource of metals that the U.S. needs. Our chairman and CEO, Jared Barron, was speaking at a CSIS event put on in concert with the State Department. Of course, Marco Rubio was all across that. Doug Burgum was across that. We couldn't ask for more when it comes to the attention on this and the recognition of how important it is. One thing that is clear too, there are a lot of cabinet departments and agencies, many of whom were named in the executive order to support C4 resources in April of last year. And a lot of them, they're running as fast as they can. All of us, and I'm sure all of our investors too, want them to run even faster. But there are a lot of people that I know from DC who I've seen around here at the conference in Toronto. A lot of people in the New York finance community. We're kind of seeing them all in this corridor, all recognizing the need for these metals. So the attention is absolutely there. We're very encouraged by that. And even think about where we were a year ago. At this conference, we hadn't yet told the market that we would be pivoting to a US-centric approach. And since then, we launched our application. We had an executive order from Trump. We got an investment from the Hess family. We got an investment from Korea Zinc. We put out a pre-feasibility study and an initial assessment. You can maybe see behind here, if I'm looking like a weatherman a little bit, a net present value of $23.6 billion. And here's where the nickel and the copper and the cobalt come in, Howard. You can see all of these metals are very critical, but there's a lot happened that if you would have asked me in PDAC last year, we had the idea would be coming, but there are a lot of exciting catalysts ahead. And, some of them, some people may be able to guess at, others, we'll just have to be patient as news comes out. But I think using 2025 as an example, quite a bit happened in the last 9 months of the year. And then geopolitically, of course, the first 2 months of 2026 have had a lot of surprises as well, good and bad. So we're very excited to keep on this path. We think we have a very clear permitting path forward. Launching our revised application on NOAA's consolidated review process, that was critical as well, because I think we now are going to have a pretty certain window in which our permit can be granted to get us up and running into production. I don't think there are any showstoppers there. I think we have all the answers to the environmental questions. So yeah, it's a very exciting time, but I guess my overall message would be, even at PDAC in March last year, who would have been able to predict all of the positive catalysts that were ahead? And I think 2026 is going to be very positive as well.
Okay, actually, just one other, I saw just a quick headline, Japan, seafloor mining for rare earths. Did I see that?
Yeah, that's right. There was a test to bring up some rare earths contained in seafloor mud in an island about 1,900 kilometers away from Japan's main islands. There's also some nodules in that general area. They tend to be more cobalt heavy, but the further west you go in the Pacific, the nodules tend to have more cobalt. The further east you go, you have nickel and copper. We like having a mix of these four metals like you see behind us. It's a good basket commodity approach to ensure, no single metal moving up or down is going to make or break us. It allows us to be profitable in any commodity price environment. But we love seeing that. We know that there is, agreements between Japan and the US on trying to push this industry forward, and agreements on mineral cooperation. I think you're going to see more and more of those types of agreements going ahead. And for us, I would say the more the merrier. It's great to see many credible names. There are new deep sea mining startups that I've been talking to at this event. TMC is obviously further ahead, but that's great. You want to have a very diverse, investable universe of companies, public and private, and I think you're starting to see that. And you're really starting to see, with over 10 non-TMC USA applicants through the US NOAA process, I think the market's voting with its feet on which permitting process they believe in. And it's not the International Seabed Authority, it's the United States NOAA process.
That's great. Well, you're a pioneer, you're the most advanced, but a whole new industry looks like it's being formed, and we're in early stages. And unlike many tech industries that are in their early formation that public investors can't get access to because venture capitalists are keeping them private for a while, you represent, at still early stage, a way for investors to participate in the disruption of this industry.
Right now, it's basically trading at 10% of the underlying net asset value based on that 24 billion NPV. So let's take a step back. Yes, there are hopefully catalysts coming ahead that will be clear to folks, and we want to keep this on time and on target and on budget. But let's say we are getting the permit. Let's assume that the permit comes for commercial recovery from NOAA. Well, we're trading at 10% of that underlying net present value. You're going to have a dynamic where, as you get closer and closer, each step as we get closer should also come with potentially a re-rating in our valuation. We're still trading at a major discount to where a similar resource project would be valued if it were on land. And yet we would be entering in the lowest quartile of the cost curve. We have 4 metals in one resource. It's higher grade. There are a lot of reasons where I would say this is inherently less risky over a 2-year period than certain land-based mining projects. And yet, we have to continue to come to conferences like this and do interviews like this with the RK Equity team and the Rockstock channel to make sure everybody's getting the message. And it does feel like over the last year, it's beginning to resonate.
Excellent. Thanks, Craig, and look forward to having a more in-depth interview in the coming weeks as you have further news flow.
Looking forward to it, Howard. Thanks.
Okay, John Pazlakwa, First Phosphate. Big news today. Why don't you tell our audience about it?
Yeah. Hi, Howard. Thanks for having me here. So big news today, and big news last week as well. So today, the government of Canada gave a contribution to First Phosphate that's non-refundable of almost $17 million. And that goes right to us, developing the method and the concentrator for purifying our high purity igneous phosphate for the production of phosphoric acid, for the production of LFP cathode active material. That's the first big piece of news right here at PDAC that occurred this morning. I had a signing with Minister Hodgson. He was very, very nice, very pleasant, and very happy, and wanted to see us move forward with this. And then number 2 happened just on Thursday, where the Canadian federal budget, there was a last minute amendment to it, and phosphate was added to what I would call the A list. There's a list of critical minerals in Canada. Phosphate is on that critical mineral list. It joined in 2024 or 2025, but then there's an even more special list of critical minerals, which is for clean technologies. And so phosphate made it to that A list, if you will. And that's really important. Why? Because now all of our downstream processing, whatever we build, concentrator, phosphoric acid plant or LFP cathode active material plant, will qualify for 30% refundable rebate on when we build those facilities. So that helps CapEx quite a bit. And then also, now that we're on that same list, we are now eligible for the critical mineral exploration tax credit. So any further exploration that we might do, even though we're moving out of exploration at some point here, we'll have better tax credits for investors. So the two things coming together: phosphate on coming to the A list, and also the government of Canada making this non-refundable contribution of first phosphate to advance our downstream processing. And all that's really important because, as you know, this company has advanced a lot on its own. We've done a lot, but this is finally, the government recognizing all of that, catching up, and doing good by phosphate, by high purity igneous phosphate, realizing that it's really here for our future in Quebec, and that it's something really strong and powerful that we have in terms of a critical mineral for all of North American electrification. Why? Because this phosphate can almost 100% be converted into purified phosphoric acid battery grade for making LFP cathode active material.
And that's what's very important. LFP, big tailwinds behind that. And if I could just sum up things, you got $17 million in free money, and the government has put you on the critical minerals list. So it looks like Canada is not forgetting the P.
Yeah, look, it's a big thing, Howard, and because, as you know, we raised a lot of money last year. We raised about 30 million. We still have over 20 million on our balance sheet. And with this funding now from the Canadian government, we basically get to final investment decision without necessarily having to raise any more capital. It puts us into a non-dilutive position here over the next, I would say, 18 to 24 months until we get to those permits. Our next big steps here are finishing off our geological model with the drilling results to come out here in the next few weeks to month, and then the feasibility study by late 2026, permitting in early 2027, and then final investment decision where the non-dilutive capital would come in to build out the mine. So we're fully financed until that. And when the government of Canada steps in like this, it does force the hand of the Quebec government as well to come in, and a number of other institutions, which will also be there for the CapEx to build out the mine. So a very, very big de-risking factor here, thanks to the good work of the federal government now really investing in their critical minerals.
That's awesome. And we have an election coming up, I think, in Quebec as well. So being supportive of projects that the federal government support, I think could be very helpful as well. But to be continued, we'll do a much longer interview, John, in the not too distant future. But I just wanted to catch you on the heels of PDAC on today's awesome news. The stock has rebounded above $1. It's now above the 90 cents, I think, where you did the last financing after it had a struggled for a couple of weeks there. But good opportunity. PHOS, and don't forget, RK Equity is an advisor too and holds equity interest in, so none of this is investment advice. Thanks, John.
Yeah, thank you so much, Howard. Great to have you here in Toronto.
Okay, Chris Dornbos, around 2018, I think, we had our first interview with you as the new kid in town from the Eagles. And yesterday, you just, received some money from the government. So why don't you give us an update on that and what else is in store for the rest of this year?
Excellent. Thanks for having me on again, Howard. So yesterday we announced that the federal Canada provided $36.5 million in a grant to support the FEED and feasibility study, as well as our demonstration phase 3. As everybody knows, that this point in the cycle of developing projects is less exciting, and so raising capital can be challenging. And I think seeing the government understand that is a big sign of sort of where the new government that we're working with now in Canada is at in terms of helping projects, critical minerals projects, get off the line. So we're very humbled and appreciative of the support from our federal government. It's very meaningful for us because the next big lift that we're going to spend this capital towards gets us to shovel ready, and that was the proposal on the grant. So that's our FEED study, which leads to feasibility, which gives us the cost estimate to get our project financing through the line, as well as de-risking the technology at a 1-to-1 scale commercial column, which we call our phase 3 of our demonstration facility, which we plan to have operating sometime this summer. Phase 2 is being operated right now and move to phase 3, have that running through the summer. So a big lift for us this year. We're hiring 25 people supported by this grant, most of them engineers and operators for our facility to design and get this thing built. So we're very excited. Permits are submitted. We did that at the beginning of the year. We have more to go through the course of this year. So really the goal of this, the support, is to get this project from where we are today, which is sort of the start of feed and feasibility, through all the way to being shovel ready by the end of this year or early next. So very excited, very excited.
That's awesome, Chris. Everyone talks about the smackover from an oil field brine perspective, and Standard Lithium and Exxon and Equinor and others are very active in there. But you've been in Alberta working on this for pretty much as long as Standard Lithium has been working on their project. This isn't your first government funding, for the project, but your market cap relative to some of the other DLE-based peers is much lower. So therein lies an opportunity, and look forward to doing a more fulsome interview with you, later this year. It's great to kind of catch up at PDAC as always, and after this milestone, congratulations.
Yeah, we're moving fast now, so we're excited. Thank you very much, Howard.
P3 Lithium. Okay, we're here with Surge Battery Metals. Last week we interviewed John Evans, CEO of Lithium Americas, who talked about how his path to a $1.5 billion fully funded in construction project. And there are a number of sediment projects, but you have, Greg, compared Surge most directly to the Thacker Pass based on the super high grade. And you came out with some excellent drill results last week. So tell us about that and what we have in store for the rest of this year.
Right. So we released the last of our drill results last week. We continue to have high-grade lithium clay results. We are the highest-grade lithium clay deposit in the United States. Last week, we had a step-out hole of 4,196 parts per million. Step-out was about 640 feet. The thickness of that 4,196 was about 70 feet. So it continues to be really good. We're just working right now to update the block model. That'll be fed into our resource estimate, which will come out probably sometime in the next month or so. And we'll also feed that into the pre-feasibility work we're doing right now with Fluor Engineering. So 2026 is going to be a big year for us, and we look forward to kind of continuing to work with you, Howard, and keep your listeners up to date.
Thanks very much. And as always, we are a strategic advisor too and hold equity interests in Surge Battery Metals, but nothing you're hearing is financial advice. But for any of our viewers who are interested in receiving either of these pieces of research from SCP Equity Research or 3L on Surge, please email us at rockstockchannel@rgateequity.com. Thanks, Greg, and look forward to doing a more fulsome interview with you in the not too distant future.
Great, thanks.
Okay, Gabriel Rabaka, NOA Lithium Brines here at PDAC. Just share with our audience what you're saying to investors, what's in store for the next kind of couple of months and quarters at NOA.
We are reactive. We're going to start our activities on the PFS. We're going to start really, I believe, in the next few weeks. We're going to start mobilizing. We already started activities on the PFS. I believe the very significant news or milestone is that we completed our warrants exercise during the last 60 days with 4.1 million US were exercised. Half of that were exercised by management, Hernan and myself, basically. And 3 million were exercised during the last week. So it's a strong...
Very substantial amount of skin in the game you have there, David.
Yeah, it's a lot of support from our founding shareholders, but also a strong commitment from ourselves to the company that we strongly believe that we got a good project, and we are pretty committed to the company and the project.
Well, as we've been saying, Argentine brines are low end of the cost curve, and there's some substantial scarcity value in the public markets, largely with, I guess, Lithium Argentina, Galan, and yourself. I guess late, but very few high-grade conventional brine opportunities. So look forward to. I mean, we've said the stock was outperforming this time last year, it's been underperforming this kind of few months, but therein lies a substantial opportunity. And with one of my big mantras is like, the insider buying is a great market signal, and you and the team investing so much, as well as Ofer from Green Elements re-upped in the most recent financing. So, excited to see what's in store for the next kind of couple of weeks and months as the lithium market is in very strong place.
Yeah. Oh, and we believe that as we move forward, the progress of the PFS is going to demonstrate that the strong project that we got, and we're still committed to complete the PFS before the end of the year, and we'll demonstrate the value of the project that we got.
Sounds good. Thanks, Gabriel. See you soon.
Thanks.
JP Vargas, CEO of Galan Lithium, stock up 4 times since this time last year. Why is there another 3 or 4 times upside in Galan?
Hi, Howard. Well, it's good to be back in Canada. We are developing the Ombra Muerto Phase 1 project. We are not far away to finalize the construction of our nanofiltration plant, and the next step is to get this into commission, testing, and sales throughout 2026. We have a 4,000 ton capacity project that is going to be expanded to 5,000 tons. We do have permits for 21,000 tons, and as we can prove our project, we are going to be developing and getting further funding into our Phase 2 projection in 2026, 2027.
Okay, great. And you have a very substantial shareholder that we've talked about before,
Klein Elements,
out of Clean Elements, which also invested in NOA Lithium. How's that relationship, and also the relationship with the Lithium?
Yeah, that's gone very well. Ofer is part of our board as well. So we are engaging with Ofer, Clean Elements, and Lithium to develop this project. Everything's working well together, and we believe that we'll be the next lithium Argentine producer in this year. So thereafter, we're expecting to grow, and the plant that Lithium has put in Argentina has flexibility to increase production. So we want to take advantage of that as much as possible. But first is to get our first ton out and selling lithium chloride concentrate in 2026.
That sounds great. Thank you, JP. I hope to have you with a more fulsome interview in the not too distant future.
Thank you.
Okay, we're here with the newest listing in lithium on the TSXV.
That's correct, LAF.
LIF, Lithium Africa. And this is Tyron and Tom Benson, who is an advisor to the company, but viewers may know him from Lithium Americas and Lithium Argentina as Mr. Volcano. So he could talk a bit about his background. But Tyron, why don't you tell us, what is Lithium Africa?
So in a nutshell, I would say we're the leading consolidator on the continent. We've got a joint venture with Ganfeng, which is fantastic because they match every dollar we raise, which has been very helpful over the last 2 years when the capital markets have been tough. So we're taking multiple shots on net every year. We're trying to find the next Goulamina with experts like Tom Benson and the rest of our geological brain trust. So we've been working diligently behind the scenes for 3 years, and we're excited to now be a public company. We've traded all of 5 days and kicked off our first raise with Cormark earlier this week, and that's been going really well.
Basically, you're a portfolio of exploration assets in multiple countries within Africa.
That is correct. And we've taken 2 to 3 years to map the continent, understand the geology, figure out where the largest resources are most likely to be, how to find them in an economic, low-risk way. Tom's been a big part of that process. And so the idea is to deliver a tier 1 discovery because we believe that's where the most value is created most quickly. However, we recently backstopped that strategy by tucking in a past producer in South Africa. There's a big stockpile on surface. And that's just an example of some of the counter-cyclical M&A we can do to de-risk our exploration portfolio.
Okay. In time, we'll be doing a bigger deep dive into all of the projects. But Tom, why don't you tell us which countries are you in? What stage of development? How close? Like, how much money do you have? Where are you going to be drilling? And where hopefully you might see a first discovery.
Right. Our most advanced assets are in the newly acquired one in South Africa, as well as in Cote d'Ivoire. We have a project called Adzope there that's 2 hours from the port. It's a brand new virgin discovery that has a 300-meter wide by 2+ kilometer trend of high-grade lithium. That was a discovery that our team made we use remote sensing, machine learning, modern techniques, as Tyron mentioned, just to de-risk exploration. We're also active in Guinea, Mali, Zimbabwe, and we're looking across the whole continent. And the idea is just find good ground, low-cost exploration to reduce the target to now that we're raising money, put money in the ground and drilling.
Okay, sounds good. So Africa has kind of come on the scene in the last kind of couple of years with some major lithium production. There have been some big stock market successes and discoveries going back from AVZ's days to Gulamina's days, but also quietly the Chinese have kind of come in and bought up Zimbabwe quietly. I think Prospect Resources was another success story. There's production in Nigeria. So there's a lot of white rocks. A lot of it's kind of like DSO, but you guys are going at it in a professional way. You're going to hopefully discover and find 43101 JORC compliant resource in elephant country, in a relatively underexplored commodity, but it's fairly abundant, throughout the continent, as we've seen. And you're partnered with some a company that's
their name carries weight in all these countries. They help us figure out the downstream. And one of the slides in our deck that Tom created shows that Africa has more blank space in terms of the right rocks for this type of deposit versus many of the other continents, but it's seen a fraction of the budget. And it's kind of interesting that probably the largest and third largest hard rock deposits are located in Africa, despite that lack of space. So to us, it's a geostatistical exercise that we're eventually going to unlock some of these regions. And we're not jumping on the bandwagon. We've been doing this slowly and methodically for 3 years now as a private company.
I remember you were approaching us as a private company at the bottom of the market, and we said, sorry, can't help you. But now the wind is at our backs, and now is a great time to be in the public market. But your market cap's only, like 30 million market cap?
30 million. If you look at the trading, Insight has been very aggressive in buying the stock. So I think it's an excellent risk reward. A lot of the juniors have fizzled out over the last 3 years. We've survived because of that Ganfeng partnership. And I think we represent one of the more asymmetrical opportunities to get exposure to a new discovery, a new drill bit discovery, especially in the hard rock space.
Okay, great. Well, RK Equity has been involved with a number of companies, including a company you were associated with, Western Lithium. We just interviewed John Evans of Lithium Americas, and I went down memory lane to getting my start in lithium some 15 years ago when Western Lithium, now Lithium Americas, was a 25 million market cap. It's now 1.5 billion. We were associated with Piedmont Lithium from very early stage, and Winsome, from its inception. So we love to be present at the creation, and here we are present with Lithium Africa. Nice to meet you, Tyron. Good to see you, Tom, and good luck, and we look forward to doing deeper dives in the not too distant future.
Thank you very much.
Alicia Milne, U2 Metals, the hottest exploration story in on the planet, perhaps ever. What are you hearing and saying at PDAC?
Besides being exhausted from constantly going from meeting to meeting to meeting, it's been great. The booth has been busy every single day. Every single minute I walk by, there's people here. So it's it's a good sentiment going on in the markets here, and we're excited to see where Cisco goes. We have our resource coming out end of the month, so just working away.
I'm hearing I went to the benchmark event, and Ken Brinson at PMET and Elevra, Dow was there, and they were saying a lot of strategic interest they've been having in the lithium space. Are you finding with the meetings mainly with financial investors, strategics, anything? You're still much earlier stage than NOA.
Yeah, I think broad spectrum of people that we've met with, investment bankers, OEMs, strategics, it's busy here. There's a lot of people around. So, trying to meet with as many as we can and just make sure everybody knows about Cisco and knows about what's coming out.
Okay, well, yesterday you hit an all-time high, but today I haven't checked yet, but I hear it's a bloodbath. So
yeah.
I don't know. By the time we publish this...
hopefully it'll be back up.
Yeah.
Yeah.
Okay, thanks a lot, Lee.
Thank you.
Kobe Kushner, Libra Energy, what say you at this end of first day at PDAC?
Look, the floor is booming, especially compared to the last couple of years that I've been here. There's a lot more capital out there. There's a lot more what appears to be actual investors as opposed to the service providers asking me for money, which I'm more used to. And people are very interested to learn about Libra, which is great. People are interested in what we're finding in Brazil as well as Canada. And of course, there's a lot of mystique around the whole cobalt angle. And
just remind our viewers overall about the Libra story.
Libra is a story that started off, I quit my job for it in early 2023. We stayed private during the downturn, which allowed us to keep our cap table intact, so we still own 50% of the company. We did something very contrarian, which is we took Libra public at the very bottom of the market, literally in the summer of last year. And we did that so that way we can use our paper as currency and consolidate the space at the bottom. The bottom of the market is obviously when you want to be buying up assets for cheap. So since our go public, we went from 6 assets to over 30 assets with less than 10% dilution here. And now that the market is slowly starting to reward good exploration results again, now that sentiment has picked up. So now's the time to be more aggressive on exploration. We have a $33 million deal with Cobalt Metals. And I believe we're one of 2 public companies that has a deal with them in place. And they're...
Is that deal? Where are they?
So that's for 3 of our Ontario assets collectively. That includes Flanders North, Flanders South, and our SPC project. We recently put out results from the Cobalt-funded program a couple weeks ago. We just drilled our first hole. Assays are pending. I'll say the results are unexpected for several reasons, and they're also very interesting for several reasons. And that was at our Stimson project, 100% owned by us. And then we also just put out an update at our Penelope project in Brazil. So we have cast a very wide net, and we're doing early stage lithium exploration, very low cost but high impact work.
Okay, well, there's been a big rebound in Sigma stock and lithium ionic stock. Where are you in relation to them in Brazil?
We're not crowded around Lithium Valley at all. There's other parts of Brazil that we believe are very relatively underexplored. So the whole Borborema area. So the northeast, the Borborema, Penelope, where we just put out our update, is in Minas. It is not in Lithium Valley, however. So Lithium Valley is in Minas.
Right.
The results there show that there's really good, excellent potential for rare earth mineralization for the ionic absorption clays, and stock seems to be trading well. Yeah,
a lot of good Brazil rare earth projects like Brazil Rare Earths and Veritas.
Yeah.
A few others there.
Yeah, and people like Meteoric, which is also an ionic absorption clay. It's about $500 million market cap. What is fun about these kinds of deposits, it's incredibly cheap to explore. If you want to do an auger drilling program, you're not talking about hundreds of dollars per meter. You're talking about closer to $20 a meter. Incredibly cheap, and you can even delineate a resource using auger drilling in loosely consolidated, clays.
Sounds good. Look, we're going to do a more fulsome interview to tap into all of this. I will point our viewers to the Resource Talks interview you did, I think, last week, which is some 45 minutes. We'll flash this up here, and we'd encourage our viewers, if you want not to wait to hear more from Kobe, to tap into that. In the meantime, great to see you, and look forward to talking to you again soon.
Thank you.
Okay, Lucas Dow, CEO of Elevra Lithium, and Ken Rinzen, CEO of PMET Resources. We have a few minutes here on the sidelines of the benchmark event at PDAC. You guys were both on a panel. Why don't you share some thoughts of what you shared the audience here today? Lucas, why don't you start?
Yeah, I think Howard, I think the fundamental focus for people was really, is this the price recovery that we've seen in recent times? Is it here for stronger for longer? And I think the short answer from our perspective is that it is. The underlying fundamentals of the demand side, and Ken made a heap of really great points there, are very strong. Supply hasn't kept pace, so that really provides underlying price support. And as an incumbent producer from our North American lithium operation in Quebec, we're really well placed to take advantage of that. And we're now operating cash flow positive, and it's we're in a great position to be able to move forward in our brownfield expansion at NAL.
Big difference from the time I saw you here last year, Lucas, to say you're cash flow positive. Pretty impressive.
Yeah, it's been a massive shift for us, Howard. I mean, Sylvain and the team worked really hard in terms of improving the operational performance and got a strong operational base, and that's really now laid the platform for us to be able to move forward with our brownfield expansion. We'll have an updated scoping study out reflecting that staged approach that we described in early January, and so that scoping study or updated scoping study will have out in Q2 of this calendar year.
All right, and Ken, PMET, what's the update?
Yeah, firstly, concur with Lucas. It's really sort of fundamental demand that's underwriting this most recent price movement. And yeah, we feel really confident about the conditions that exist in the market, a little bit more tension around a combination of demand and supply, and you're starting to see that reflected in price. So all in all, great news as you compare that to where the industry's been in the last couple of years. In terms of progress in the project, we've continued to work really hard and even through the low in the cycle to see our project progress. How does that manifest itself? Well, updated resources, feasibility study during the latter part of last year, and that combined with our ESIA documentation submission shortly represents the last hurdle for mine authorisation over about the next 18 months to 2 years. So we're optimistic about the project continuing down the pipeline. Now with the inclusion of very valuable co-product credits in the form of pollucite concentrate holding cesium and tantalite concentrate containing tantalum, they too are going to be an important part of our future story as we head towards production.
Okay, and you guys are both Quebec projects, and Rio just, I guess, took over the Nazca control and had a bit of an update there. There's a lot of great projects here. There are obviously a number of projects in the US, some of which have gotten funded. We just interviewed Lithium America's John Evans. And so just what's the overall, where does Quebec fit? What's the dynamics since Carney has been here, and US, Canada, integrated relations for lithium. How do you see Quebec evolving?
Ken, you want to lead off, or?
Oh, I'd love to. Well, I think it's going to be Quebec's day in the sun. The combination of existing projects like that of Sayona, combined with new projects coming through the pipeline, I think we can be optimistic about the future part that Quebec plays in global supply, and maybe even take that one step further, future supply chains that ultimately support Western markets. I think that's going to be Quebec's story over the next decade.
Yeah, I think Howard, clearly with Rio Tinto now having the reins at Bécancour and bringing that project to conclusion, we're obviously very keen to see that project come online. Outside of Tesla's Corpus Christi facility, that'll be the second lithium hydroxide conversion facility in North America. We're also starting to see other aspirants like Mangrove Lithium making a play. That'll be a real game changer for us in terms of logistics and also helping to strengthen the case for that battery ecosystem that the Quebec and Canadian government wants to develop. So I think Ken's right. We're certainly in a space of there being a great platform for collaboration. And whilst there's some sort of near-term geopolitical tensions, I think we'll get through that. And Quebec is in a unique position to be able to really continue to provide the source of lithium for North America moving forward.
Sounds great. Thank you to the two Aussie gentlemen realizing the Canadian dreams.
Thanks, Howard.
Good on you.